Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Here we are entering the last week of June, and it's been a pretty good June for equity markets. Markets continue an uptrend. Let's do a quick review. Basically, you have the NASDAQ at a new 14-year closing high. The NASDAQ was sort of lagging the S&P this year and is slightly lagging it. However, it's good to see the NASDAQ break into new highs. The S&P 500, the Dow Jones Industrials, the Dow Transports, the NYSE Composite Index, also all flirting with new highs or hitting new highs and pretty much on a regular basis. So that pretty much tells us this uptrend is still going up. Now, there are a lot of peripheral indicators that kind of may give you second thoughts or make you pause, meaning the VIX is very low, a sign of complacency, so that tends to scare people saying, oh, maybe the market's done for. Well, that's been going on for some time, so obviously that's not working. The CBOE, put the call ratio, hit not a new low, but kind of low at 0.58. Again, an indication of complacency. And of course, if you look at sentiment surveys from Investors Intelligence or the American Association of Individual Investors, those show extreme bullishness and not very much bearishness. So all those kind of things tell you like, oh, this market's got to correct. However, those are all peripheral and secondary indicators. Your primary indicators are specifically the indexes, and they're hitting new highs, and of course leading stocks. How are they doing? Well, actually this last quarter, a lot of technology and biotech stocks are doing very well, and not until you see those stocks start crumbling, this uptrend probably still will continue. Now, speaking of technology stocks, we're looking at one stock, Palo Alto Networks. The symbol is PANW. Basically, it's a leader in cybersecurity. Now, a few weeks ago, it broke out from a double bottom base, the 7250 area, and right now it's flirting around the $80 to $78 area. Now, it took out the high, 80.84 that it hit in March. However, it's having some resistance right now at the $82 level, and right now it's trading the $80 level. So you can pick the stock up here now if you're an aggressive investor, or wait to see if you can take out that $82 level on decisive volume, and that'd be your add-in point. So the initial pivot point was actually at 72.50. However, this is an area where stock's showing some strong accumulation, so you could cheat in here, or of course you can wait. Now, if the stock falls below 76 and the market continues to do well, then maybe the stock's not ready to move. That's something to be concerned with. Now let's take a look at some of the fundamental factors. Last quarter earnings came in at 57%, sales came in at 49% increase quarter after quarter. Now the 3-year average sales growth rate's at 74%, and the 3-quarter EPS growth's at 72%. So you have a very strong company. Analysts are expecting 2014 earnings to increase 60%, and for 2015, earnings to increase 63%. So you have a lot of good growth going here. And next quarter, they're looking for about an 84% growth rate. Now, top funds have been accumulating Palo Alto Networks over the last 3 quarters. So you have funds like T. Rowe Price, Morgan Stanley, American funds, and a bunch of other notable funds are accumulating shares of this stock. So we started accumulating the shares right about the $75, $77, $80 level for full disclosure. So we are holders of this, and of course we'll play it accordingly. We're always going to let price and volume be your guide. So as always, consult your financial advisor to see if this trades for you. However, let price and volume be your guide. Have a great trading week. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago.